Hi, it's Steve and Joe from Freshagenda, not in the same room, but on the same call for this week's Outlook blog, Steve.
Yeah, I have a little bit of a reaction to a vaccine. So I'm laying a bit lower today. Different locations, yeah, and we'll hopefully do this quickly. That will ensure, Joe, that I probably won't talk as much.
Great.
Yeah, bonus for everybody. All right.
Okay, Steve, we're back. Another GDT and a negative result. So we've got a bit to work through in terms of what happened. And of course, chart of the week, which a little bit different this week.
Yeah, different way of doing it. Okay. So I thought it'd be useful, Joe, to just kick off some background here that, leading up to this. I don't think there's any suggestion that this was softer because there's a feeling milk production might come back, because milk production is still struggling. It just pulled out some, the latest US numbers, they came out a week ago, but we've still got these European major producers, dipping down further year on year. But the one thing that I think is interesting, there's been a huge fall in feed prices. Just about every commodity group has been knocked around. Feed, oil, seeds. Because of the fears of recession, there's possibly a bit of this that may impact sentiment in the US. That certainly there's a lot of talk about the fact feed prices have come down, and that may be pushing an agenda that maybe production will come back a bit stronger.
Yeah. Obviously that will take a while, and we're not seeing the signs yet. But there's also, I suppose, a bit of a lull in activity in Europe, you would say. Everyone's on holidays, hopefully enjoying very hot weather over there. So maybe, just a bit of lack of direction. And obviously on a macro level, we're still dealing with a lot of uncertainties, aren't we?
Yeah. So leading up to this, as you say, the European lethargy is certainly probably because, part of the reason that skim milk powder has drifted. It's the only one that's drifted. Everything else is reasonably steady in Europe. Even though there I've shown that, there's little dips, and, it's the euro really that's weakening there that's probably behind that little chart at the top. But the US has also been doing a drift, and I think that is connected to production and weaker demand, and, maybe a change in milk use that's coming.
Sure.
So in the event, it's all about demand really, or lack of. We saw fairly healthy falls, really consistent size of those bars dropping for whole milk powder, skim and AMF, but butter absolutely tanked. And there's certainly a risk of price sensitivity there. Trade data has been pretty good recently. We divvied all that up last week in doing our outlook, and it's surprisingly resilient in the developing world that butter demand has held together. But you can see what happened here. Not many people turned up, and they didn't turn up with much intent.
Yeah.
So quite low across products. And when you look at the action on the night across, skim and whole milk powder, they just started low and just faded, and butter is falling.
Yeah, I suppose, that chart on the right that we're repeating there, that certainly tells the story for skim, butter and AMF, but whole milk powder is a bit of a different one, isn't it? It just, it started off okay, but just didn't sustain.
Yeah, just faded, yeah. Similar to the last event, really, which posted a, small rise, I thought.
And we're still in fairly seasonally low offerings, aren't we?
We are, and we're going to stay that way through August. So we've got another 2 months, another 3 events of low volumes before we kick up a bit. So the percentages, and it's a good point you make, because the percentages here, so North Asia, read China, picked up a bit again, so that's healthy. But the volumes, because they're small, we're still not really showing an acid test here for demand, because we're still seasonally quite low. Southeast Asia also maintained high percentages, and the volumes pretty good against last year there. When you look at the right-hand side there, so that's a chart for tonnages.
Yeah, and again, that's sort of been that resilience story that you mentioned, Steve. Like, demand's been, despite these high prices has been fairly consistent from that part of the world, hasn't it?
It has, yeah. And then I think the other interesting story back to skim milk powder has been this lack of interest in European product. And so everybody is away and they don't want to buy it. So we saw the premium, and this is yo-yoed around, as the chart on the left shows. We did have a lengthy period earlier in the year where we had the European product achieving better, but it's tanked and really tanked at this event, and lost over $400 in the last two, compared to $100 loss for the Fonterra product. But just showing the benchmarks there, the comparison of those prices is quite interesting. I wonder if the softer US market's got a fair bit to do with this, and the expectation maybe a bit more product coming, and so there's a chance to save. That's a thought anyway.
Yeah, skin's been so strong for so long, maybe just a breather.
Yeah.
Yeah, you've hijacked chart of the week this week, Steve, and bringing out your strong accounting vibes here. You've really had a deep dive into some farm profitability data.
You're really pushing it there, Joe. But look, yes, there's a firm called Fraser that do a very good analysis of Western US production costs. So they have a large client base. They put these documents out free. They're benchmarking reports, I guess, but they show an average of performance, and there's a whole lot of stats in there about cost structures and trends in different profitability measures. Quite interesting reading. But just show the chart on the right, just showing how the costs have drifted up, and the margins are pretty skinny. There's a lot of stats. I pulled out the chart on the left because I thought that was most telling about what's going on regionally in the US.
Certainly is. Some big red bars there for Arizona and New Mexico.
Yeah, and California pretty skinny. You think San Joaquin Valley, $1.25 a hundredweight. That hundredweight, that is the cumulative over 6 years.
Yeah.
And that's a net profit line. That's not the cash line, but so there's a bit of accounting in there in terms of how things are written off. The growth, the strongly profitable Idaho, Panhandle, Pacific Northwest, they're good. I thought the other thing worth comparing here is what happened to cow numbers in 21. We could dig back and go over those years and see what the growth is, but you can see why cows are exiting quickly in New Mexico and lately Arizona.
That certainly lines up with that profitability, but there must be something else going on in the Pacific Northwest, Steve.
Yeah, and I think there were some physical dramas there. I think that was to do with bad conditions, and so it's caused some farms to fail and exit. And that it certainly runs against the profitability, and I think that region had the highest costs last year. So there's certainly something there that's it's a standout. But yeah, and look, I'll just go back to this to remind us that in 22, so this is 21 data, you go to 22 and the milk margins over feed costs are actually up 50% in 22. That's milk prices have gone up, and they've gone up at a faster rate than feed costs. But I think all other costs have gone up faster than both those. So the true impact on margin will wait with anticipation for the June report from this firm. They'll put out a half year add up. That should be quite interesting, just to see how all those other factors have caught up, and what it tells about how the industry might be adjusting.
Absolutely. Fascinating stuff.
Yes. Anyway, look, folks, thanks for watching. That's all from us. We'll be back again soon.